a lot of the African entrepreneurs, some of them are really, self-made, and not only self-made in the Bill Gates perspective, but it's really adopting practices and business mentality that was not there, and then becoming successful. Because I've seen quite a few successful fintechs where the people have led the money.
Hello, everyone, and welcome to the very latest edition of Get Funded Africa Attract, the VC edition. I am very, very glad to have with us someone who has lots of thoughts and lots of experience in the VC world, as well as the banking space as well. Today, we have the opportunity to actually welcome someone all the way from Nairobi in Kenya, and you'll get to learn a lot about his history, his personal story, as well as the opportunities that he's been able to create for entrepreneurs through one of the largest supporters of entrepreneurship in Africa. Today, I'd like to welcome Mr. Kennedy Mubita of SC Ventures, the venture capital arm of Standard Chartered Bank. Hi, Kennedy. Welcome to the show.
Yeah, thank you for inviting me. I'm really excited to speak to you today.
Great, Kennedy. I'm going to just kind of just dive into the very first segment, which is, just to get a personal background. We would like to know, who is Kennedy? Where was Kennedy born? Where's he from? And all that. Just more like, a personal background for all of our viewers.
All right. My current role is I'm the lead for SC Ventures in Africa and the Middle East. We have an innovation lab in Kenya that supports the continent. So I also double as the innovation lab manager. We set up about a year and a half ago in Kenya, and 2 years from Singapore. SC Ventures is the innovation arm of Standard Chartered Bank, and we are set up to promote innovation both inside the bank and outside the bank. So sometimes we do feel like a bank, and then in other cases you might find that we look like an outsider and a venture capital unit. We thought this is it's a sweet spot that has come about following, the fourth industrial revolution, where a lot of companies are rethinking their digital journeys. A lot of our clients are not ready to just pick up. When I say our, and I'll be dishonest, sometimes when I say our, I mean at the bank, and when I say our, I mean at the venture capital. I hope you'll be able to figure it out from the context. But from the bank, basically our customers, the banks used to have standard products for quite a long time, 30, 40 years. And then everybody trained in the banking sector was mainly very much used to be a processor or a transactor. Whereas, so with all the policies and procedures being driven from head office and countries just meant to execute, and any deviation on those particular products would have to be sent way back the chain through maybe 4 or 5 layers of management before anything could be done. And the fintech environment came up, and fintech started cutting through the red tape, looking at the problem statements, solving them, and we started seeing a bit of shift of customers from the banking sector, and also warnings that banks are not future ready. So SC Ventures was set up to be able to bridge that gap and break down those long implementation channels. Additionally, as the financial technology framework started changing, in other words, where you find that some solutions are actually not bank suitable, and you need different entities to resolve those community and financial problems. And so as a result, the SC Ventures mission was basically expanded to not only look at adoption and digitization of the client profile, but also to look at different ventures that may not necessarily be financial organization. And so we looked at it from a product and subject matter expertise perspective. So currently, We're looking at in the insurtech industry, see what can we do in that industry. We're looking at IoT, deployment of IoT in various industries, not necessarily solving a financial problem, but creating data that can be useful in a financial platform framework. We looked at blockchain, for instance, how is it applied to provide trust and the need for frequent authorizations, etc. And so we've been looking at these areas of technology, and we are actually investing in them. And just to give you a few examples, we actually are invested in RippleNet. We're one of those. Recently we actually started using blockchain to digitize custody processes in various markets. We have done digitization of the AML process. But I know you asked me about myself, so that's part of the problem. That's about with my current role. In terms of nationality, I was born in Zambia too many years ago. If I mention my age, some people might think so. I was born in Zambia. I went to a select school in Zambia called Hillcrest, and then went to the University of Zambia where I studied mining. And
mining,
then,
you said?
Mining engineering.
Okay.
And while studying mining, and towards the end, I started meeting with a lot of guys in the commerce. I did mining because whenever basically the country decided that anyone who has an aptitude for mathematics and or arithmetic from this basic level is to do mining, so that we can create our own industrial base. But as was the end of the program, I started realizing that from Africa perspective, it was also important to build a business acuity and engage in commerce as well. So when I left the university, I actually joined the bank and didn't go to
into mining.
And I quickly rose up, and the benefit I ascribed to my mining engineering is that engineering is a very detailed discipline, and when you're studying engineering, things like rock mechanics, engineering mechanics, etc., you're not afraid of detail. So when I moved into a competitive environment, I found that the tools that I had from the mining training, mining development, and the technical educational framework was very well suited for a banking environment. So I quickly rose up to head the department within 18 months, and so when I asked for with youth exuberance, the exuberance of youth, I thought I should be a managing director immediately, and my bosses told me that's not the way. You need to have other qualifications within this field. So that's when I diverted and started for chartered accountancy. And when I finished, I think the professional level, and I was headhunted by Citibank, and so I became the financial controller in Zambia. And then within 2 years, one of our regional heads requested me to come and help them set up in Tanzania. So I moved to Tanzania as a head of finance, and because it was a startup, there was nobody doing HR, doing credit, but we did have HR issues and we did have credit issues, and I can do programming, and from that level, it was a program that I got quite rudimentary, and I managed to set up programs for HR hiring, credit processes, and so they eventually became a chief of staff, and that was about the time, and this is where I start revealing my age. I became a Y2K coordinator, at a very young age. And although some people think Y2K was a hawk's smile, for me that was a very great learning for me, because during Y2K you had to go through different systems and platforms. The water delivery system, the electricity supply systems, the help desk numbers and so forth. Are they Y2K compliant? Do they have 4 digits, or will they revert to year 1900 when it turns to 2000? I think that's, although I also eventually called the Fox because we did all that preliminary work and Compaq renewed all their equipment. But, both Russia, which had no Y2K program, and the West, which had sort of crossed over into the year 2000 very, very well. Just yeah.
But it does show that your attention to detail, or your engineering background, also helped with that attention to detail, and basically all this learnings and all of this was useful.
Yeah, we're not. I mean, I wasn't afraid, and up to now, I'm not afraid of detail. And I sit in rooms where there are quite some programmers and engineers and a lot of guys with PhDs in data science, and I don't feel uncomfortable. So from there on, I decided to shift. They gave me a job. I became head of operations and technology at Citibank. Going back to Zambia from Tanzania, and we set up we did a lot of conversions from the legacy systems, which were mainframe based, to database systems, for the bank. And that was the first time I was given that regional role as well. I was managing the Africa conversion of Citibank to a FlexCube platform. We used to have a database platform called Cosmos. So those who are old enough for this will know what Cosmos was.
Unfortunately, I do.
So FlexCube, and then when I started getting a lot of challenges from the guys in the front office in terms of, they cannot sell a product, they cannot explain what's for the configuration of the clients for ERPs to the bank, and RM started calling me to resolve some challenges. And so when I did that several times, my boss said, I don't think you need to be an operations guy at the back end. I think you need to be in the front. But then, so what was commensurate? That's when I went to West Africa. And I became the transaction banking head for first of all, it was Central Africa and the Congo. And then at the end of that period, I was also made West Africa head, excluding Nigeria. And so I was transaction banking head for some time. And then I moved back my family, because of family reasons, I had to go back to Tanzania, where I remained payments and collections head for Africa, and as well as transaction banking head for Tanzania. And I didn't find the role was very fulfilling, but I thought I delivered for that role. We had new clients, we had new platforms. And at that point, Standard Chartered Bank came calling. They offered me, they asked whether I was ready to go back to West Africa. So I said yes. And so then I moved to Ghana, where I was the head of transaction banking for Ghana and West Africa, excluding Nigeria. And then shortly after that, after doing that job only for 7 months, the West Africa region was merged with Nigeria. And at that time I was a managing director level within the bank. And so we have, there were 4 of us in Africa and one had to go. So I moved to East Africa, to Kenya, where I am right now. Where I am right now, and I started managing East Africa transaction banking. And it was also felt at that time that probably that scope was not appropriate. So SC Ventures needed somebody to lead the region in innovation, and therefore I took up that role, which is the role I have right now.
That's a very interesting journey, and I like how you were actually able to show on a step-by-step basis how you actually got there. Now, of course, I would be remiss if I don't ask. You transited from Standard Chartered Bank into SC Ventures, and today you are the Africa lead for. Actually, it's not just Africa. I believe it's Middle East and Africa. Is that correct?
Yes.
Yeah.
Yes.
And so basically, one of the things that our viewers will always ask is, what is the difference really between a venture capital firm and a bank?
Yeah, I mean, I think in my earlier description, which I thought was, over elaborate, but I think now is useful, is that while we were going through a transition process. The bank, very traditional StanChart. If you ever interacted with StanChart before 2015, I think you would have found an extremely rigid entity. And if you're asked for anything that is outside the approved remit for the bank, you would be told that no, we don't do that. But as a result, we started particularly, I mean, all over the world, even from, if you look at Citi, I think Citi had started with and that's why I think StanChart to some degree looked at us and sort of approached me and we joined them, but that in 2015 exactly. That I think Citi had started seeing the pressure coming in from the platform businesses, and they could see a trajectory, and I was very heavily involved in that. So that's the same experience that I was bringing to the bank in terms of working on digitization. But first of all, digitalization, where you just convert whatever you're doing into a digital platform. But then that's not enough, because again, you find that some of the controls and risks that you are trying to address, which you had a manual process for, now can be done digitally. So fintechs were expressing themselves to be done digitally. So that was my first conversion place. How do we digitalize the bank? And how do we then start innovating around digital? And then we discovered then that there are players outside, as I had mentioned earlier, particularly the fintechs, who are solving problems, particularly in the payment space. There's a lot of investment, and most of the fintechs we look at started looking at creating payment gateways of collections, or hooking into national rails, and also giving e-wallet holders. The development of mobile money also enabled the extended reach to the local community.
Developing convenience.
So how do we now this is where maybe it become relevant to a lot of the audience, because if you look at big companies like Citibank and JP Morgan and all that, they have the capital and they have the control framework on which to build. The disadvantage is that they have legacy structures, legacy systems, and sometimes you find that people who are very useful in their roles, when those roles become irrelevant, they create friction in the innovation space within those particular banks. So how do you balance those two, which is might be the challenge. So for venture capitalists, from a venture capital perspective, we're looking at what are those fintechs that have identified a societal problem, and all it needs is culturing it in a proper control environment. Now, there are those who are very cold-nosed, what I call cold-nosed venture companies. They basically see an entity, this is solving a problem that exists right now. They've told us they need money to improve systems, to build an HR, to build more partnerships globally. And if we give them $10 million, they're going to do that. And in that case, we shall scale. So those are value investors. We just say there's value in this market space, and if I put money into this investment, it's going to grow substantially. And then our place, we find our place. Ours is SC Ventures. We have a unique approach. What we say is that we have the control environment. We have the relationships with regulators, with key partnerships. We don't have the innovation that you have. Now, if we come together and co-create, in other words, around the solution that you've identified, and build an entity. And so that's how we now building our ventures. So we take with the fintechs we engage with, we actually go through a proof of concept framework, and then we sign up MOUs in terms of what do we want to build, and then we test the wireframes of the solution. Are they as robust as they're supposed to be? Do they take into account regulatory concerns? But personally, from a personal perspective, I always tell the fintechs that I engage with that don't be afraid of regulation, but think of what the regulation is trying to address and address it. And then you go to the regulator and say, there's a risk in this space. A simple one is like AML. I'm facilitating quick, rapid payments from one country to another. But have you taken into account AML? Do you know the services or the fintechs that are innovating in the area of AML? Have you thought of adopting them, and working with them and making the AML process a digital one? Because it's not
for
a choice
purposes of our viewers, what is AML?
Yeah. Oh, sorry. AML is anti-money laundering. And so what tends to happen, and if you watched El Chapo on Netflix, you will know that El Chapo used to send, they used to get drugs from from South America into the US, and then he needed to pay for it. And so obviously the US is not very happy sending drug money back. And so you need to find ways of doing it, of legitimizing illegally gained money. So banks are very concerned about that. So if you are an innovator and you're saying, I want to make this process quicker, it makes sense. I put money in a wallet in Mexico and I withdraw it in a wallet in the US. This looks very efficient. Yes, very efficient if the only person using it is Mother Teresa, because then she's not going to have drugs on her. But so we know that the world is not full of Mother Teresas. The world is full of all sorts of people trying to make a quick buck. So you've got to be able to immunize the platforms and the connections that you're providing from people that have ill intention, and make it suitable for people who have legitimate reasons to do it. And this is one area where a lot of the fintechs do not innovate around, and they look at the capacity or maybe the technology available, and they say, why doesn't everybody do that? And so
that becomes obvious.
So we then, from our innovation journeys, is we sit with the fintechs, see the benefits that they have been able to, the problem that they've been able to solve, and then sort of build a structure with them that makes it robust and immune. Because you don't want to have like what happened recently on Wirecard, where some fintechs they claim to have $2 billion in an account, and then that wasn't there. So there are those issues that we need to resolve and perfect without killing the idea. So we don't have old-nosed investments. We have investments which are very, very much integrated with the platform, and therefore we work with a platform where we are providing more than what is existing. We normally turn that into ventures where we have majority shareholding, and where the fintech has probably resolved 80 to 90% of the problem. We put in the 10% capital to help it scale, and we let the fintech run it.
So I mean, that's obviously a question that I should ask in terms of what is. So I get, from my understanding and from reading about SE Ventures, and correct me if I'm wrong, SE Ventures primarily invest in fintech companies. Is that correct?
Yeah, absolutely, yes.
Okay, and then what's the general range, or I would say ticket sizes, of what checks do you normally? What's the general average range of checks that you write for these fintech companies?
Yeah, of course, one of the issues we're really looking at is the size of the price. Are you solving a fundamental problem that exists in the financial sector or in the society, which has a financial angle that when resolved has a substantial uptake? Because is it worth the effort, worth the price? So some problems have a technical solution, but they're very localized in their solution. So in that case, we would normally not invest. But of course, we believe the process that we engage with you to make those dimensions helps you eventually say, okay, we didn't have a regulatory stream. Let's do a regulatory. We didn't have a compliance stream. We didn't have proper cloud governance. Let's work on that proper cloud governance, and we wouldn't then invest. So that's the purpose of our accelerator lab. You know, as we go through that framing the problem and framing the solution, we're actually helping you structure your product better. So we think it's a win-win situation when we engage the fintechs, because once we've given them that journey, which they probably get free of charge, it's almost like free consultancy, but we don't feel eventually this is not, the size of the prize is not sufficient, then we would part our ways, and then you see whether you do that, and you can come back later maybe and to work on that. The minimum capital size that we can consider is actually quite low. It's actually $50,000.
Okay.
And we go up to $5 million. These, I would guess that I would say they're just guidelines.
Yeah.
Because I think we have seen some investments where the size of the prize is significant, and we were forced to go beyond $5 million. But
what is, if, I mean, so some of the average tickets, of course this can vary, this is usual in venture capital, but what is the size of the current fund for Africa?
Although I sit in Africa and in Kenya, I'm actually considered an outserver of the Singapore office.
Okay.
We have a global pot, which is $100 million.
Okay.
So the distribution will be based on the type of ideas that come through. So we have. So if the ideas are from Africa, we will get part of the pot. If the ideas are from Asia, that will happen. So we don't really provide capital by region.
Okay. And how are there any interesting fintechs that you have seen or that you guys have invested in recently from Africa?
Yeah, well, as I said, we've been around for 1 year. We have a very heavy pipeline that's close to closure. I would have loved to be able to mention the names right now, but I have this session by the end of the year. I should be able to give you one or two African entities. But what we do have is that we have some projects that are currently in proof of value. You might be able to, we shall be mentioning one of the items, because when it goes into MVP stage, we do want the market to be aware of. So hopefully at the end of this month or maybe mid next month, I should be able to announce some fintechs that we are really interested in and are partnering with. But our pipeline is actually quite heavy. We have a pipeline in West Africa, in Ghana. We have a pipeline here in Kenya. We have a few, one or two in the UAE that we're working on at various stages of due diligence, and those include research, building up the prototypes, and then moving up to MVP. We normally announce them at around MVP, and I think one as we speak to is close to MVP because the proof of concept is going quite well.
It's very, very, very good to hear. And essentially, with these fintechs that are coming out in the pipeline, now, just now when you mentioned, you said, hey, you have an accelerator in Ghana, you have one in Kenya. So what about the fintechs or entrepreneurs who have ideas that are not necessarily in a location where your accelerators are based? How does that work?
No, I'm actually, the names I've mentioned that because of the fintechs that have given us proposals or propositioned or offers or responded to some of our requests on the bridge. And as you know, Nigeria, Ghana, Kenya lead in the area of fintech, as well as South Africa.
Yes.
South Africa, they're more on the larger side, but we have interacted with many of them, and they're part of our fintech community. There would be nothing wrong with having a fintech from Angola. We've actually had some interaction with some fintechs in Cameroon and another fintech that's more or less, I wouldn't say from Zambia, but they're across the African continent, so they have presence in some of those countries. Well, I mean, it's a kind of it's a challenge that we work through in terms of, you know, how do we, because some of the fintechs in some of the smaller countries are not easy to scale, you know, because, you know, a region like India, which has got 1.3 billion people, and there's a homogeneous legal framework. Of course, state laws taken into account, but
yes,
there's a homogeneous financial sector and so forth. So if you solve for the India market, you literally have a market size of 1.3 million, whereas
billion.
You solve for 1.3 billion. But when you solve for the Malawi market, you probably got a 14 million, and if you're going to replicate it in Mozambique, you know, the startup costs are going to be the same, the legal negotiations are going to be the same. So it becomes a bit more difficult to scale from that region. What I do see happening is that, you know, we maybe work with the Nigerian fintech, which the home market is large enough, and once you solve for that, your fixed costs are still covered by the Nigerian market. Then you can go into the hinterland and just customize for the local utilization, because again, the size of the price for the smaller markets would warrant it and enable you to provide network and connectivity and also support your home market.
Is that something that is holding back investment into, well, African fintechs, that ability to actually scale across markets?
Yeah, I think this is available in the public news. I mean, Nigeria is the largest FDI receiver for fintechs, particularly because once you solve for that market, you have access to a $200 million plus market, and then that head office structure can support, you know, Ghana and the hinterland and the region, you know. So you probably start from Nigeria, then try to see whether you can do something in Niger, then start in Niger and see whether you can penetrate the Nigerian market.
Yeah. But that seems to be a big challenge, because doing business in Nigeria, as you mentioned, is very, very different from doing business in, say, South Africa. How can African entrepreneurs, in this case, how can African fintechs actually have a model that works in multiple markets to hit a large enough base?
We do have some fintechs in our pipeline that have actually touched many of those markets, you know, and managed to go through. But of course, the break-even point is, can you rise to the break-even point where you become multinational? Yeah. And this is the advantages that we would have, say, you know, if a fintech solves a problem. And this is why I'll take it back to, first of all, the internal co-creation, where if a fintech is partnering with a Standard Chartered business and solving a Standard problem for say the business in Kenya, which is also relatively large, you know, and then once you solve for that, then that problem then you can take the same fintech and solve the problem now in Zambia, which is much smaller, but you know, the legal stuff has been done, your infrastructure, tech infrastructure has been done, it's probably in the cloud, and all you need to do is provide an instance for say Zambia or Zimbabwe or whatever. So it's so Standard can, because Standard as a bank is in 15 countries, and so if we have a solution with a fintech in Kenya, for instance, which we do actually, and then we are able to take them to other countries, which is happening. Some can even be taken globally, you know, into Asia Pacific and into that region, into Malaysia, into Philippines, into Indonesia. Those options are there for the fintech for which we solve a problem.
Sounds interesting. Thank you so much. Thank you so much, Kennedy. So now just jump into a more personal and a more relaxed section. We call this rapid fire. And don't worry, you're safe. No gunshots here. Okay, so are you ready? So, like I said, I'll just ask you
Yeah.
some set of questions and then whatever pops into your head and a quick answer. So, what's your favorite sport?
Actually, it's not a sport. It's chess.
Well, chess is a sport. There are many chess fans that are probably listening to this right now. Like, no, you didn't.
Sit down, somebody said I need to do golf, and I went to play golf, and it wasn't resonating. I felt like I was in the wrong place. Then I also watch boxing. Although I wouldn't get into a ring to save my life.
Okay. What's your favorite book?
I think Homo sapien, by Yuri. Yeah,
Yes.
that's a nice, because I have I'm a secret anthropologist.
Okay. Who's your favorite author?
Well, I guess I would say Yuri, but it's because of that. I've read all these books, but that's pretty recent. Had you asked me some time ago, I would have given you a different one. But I'll stick with Yuri.
Okay. And how do you relax? Because you do have a rather hectic schedule.
I like sitting outside my balcony, and so I put a lot of flowers there. So I can say the flowers are my hobby as well. And then so I like doing that. And then I have a new son now, so I'm playing a lot with him because I. He's the last one in the role, so I'm actually not sure how long I'll have him. So I'm good. Yeah.
You have more than enough time. More than enough.
Yeah. Yeah.
That's good. And so that means, of course, that you're performing a lot of daddy duties right now.
Oh yeah. He's now he's 2.5 now. So he started talking, so it's more interesting than when we used to use sign language.
That sounds good. That sounds very, very good. So, Khadija, we would actually need to also, naturally, you've learned about Get Funded Africa and all what have you, and what we do.
Yeah.
What advice would you have for us, actually?
First of all, we have a fintech bridge. You just go in there and you sign up. Just go to our fintech bridge and sign up. Then you'll start seeing the themes that are coming up. A lot of the themes that are there reflect what our customers want. So we have had we posted 2 challenges on the bridge. They were global challenges. So a lot of fintechs from Africa, Nigeria, Ghana, and also logged in and presented. We actually had the record-breaking submissions for the problems statement there. So on the first one, I think we've closed on that one. We have a partner that we're working with, but there are other fintechs that we identified during that process, and we have invited them to curate their solutions and also help them cover some of the gaps which we thought they had. So that's the first thing that we could do. The second one is, of course, just to be more comprehensive. And I think, it's probably a bit unfair to compare some of the African fintech solutions to some of the global solutions that are proposed, by virtue of the fact that a lot of the fintechs in Europe and China are resourced very, very well. Yeah. And so, so one of my missions, my personal mission, is really to try and see how we can improve the submissions that are being made from some of the fintechs in Africa, and then make them more standard.
Pretty much the investor readiness.
Yeah.
Yeah.
Yes.
We get that a lot. And generally, what advice do you have for entrepreneurs? Especially fintechs that are trying to, solve a problem, or that are trying to fundraise and things like that. What advice do you have for them?
No, I'm actually very, very impressed with the entrepreneurs. As this is where my secret anthropology comes into play. I think I visited an Indian friend of mine home recently, and we had this delicious meal with a lot of spices. I know in Nigeria we also have a lot of spices, but a lot of spices and a lot of shades of taste. So I told them that this is what 4,000 years of cooking does, isn't it? Where so my inference also is the fact that when you look at some of the companies that they existed, have been wealthy globally. They've been handed over from generation to generation to generation, and so the current leaders have had a lot of training, a lot of in managing commerce, in business, and so forth. Whereas a lot of the African entrepreneurs, some of them are really self-made, and not only self-made in the Bill Gates perspective, but it's really adopting practices and business mentality that was not there, and then becoming successful. Because I've seen quite a few successful fintechs where the people have led the money, and so I'm actually very, very impressed, and I would say keep it up, because with the current disruption and supply chains, the current uncertainty with regards how is the economy going to reset, the only employer that you can really trust is yourself. So entrepreneurs who you come across are very brave people, and I really want to wish them all the best, because that is the future, and that is going to be the savior of Africa. Developing our own unique way of innovating, getting funding for it, having the disciplines necessary to execute, not giving up. Because a lot of the entrepreneurs that I meet, they don't have a give up mentality. And so sometimes even when they irritate me, I'm actually proud of that, because I say that's what you do. I got my job by irritating somebody. So that's what. And you're doing a great job also mentoring these entrepreneurs and helping them find finance.
Yeah, thank you so much, Kennedy, because we'll just use those as the last words. The only entrepreneur you can trust is yourself. And so with that, we would say thank you so much, Kennedy, for actually being on this episode of Get Funded Africa Attract, the VC edition. Thanks a lot for your time, and thanks a lot for your advice.
Thank you very much, and I hope we can chat some other time.
Okay, then. Bye for now. Thank you for watching.
Bye. Thanks.